Sorry about this delay. My clicker was not working, but I'm back. Hey, everybody. I hope my audio is working. Testing 1, 2, 3. I think so. Let me know if it's not. I didn't have time to test it today. Hello, everybody out there. Yes, this is a very weird 24 hours since I've last been here. And let me just check the volume. Testing 1, 2, 3. Here. And we got it. Boom. Okay. Sorry, a lot going on. Back to back. Rush. So this story today is a 10-point story about a potential coordinated attack. And the question is it a coincidence or is something awry with what's going on in the world? And as they always say, is if people are trying to ban something, it's good stuff. So let's go. And we know governments don't have our best interests in mind. Disclaimer, this is not investment advice. The story today is real simple. Is there a massive coordinated attack on crypto happening at all levels right now? Regulators, bankers, European central banks, etc. And the real thing is a pretty clear indication that TradFi either wants to kill crypto or get a piece of it. I'm not sure. Either way, short term, this could be a bumpy ride, but long term, it's going to be good. So the question is, how do you want to play it? So let's first of all talk about the inspiration for this, and a big thank you to Sanjay for sharing it with me. It was this tweet from the Coinbase letter. Basically, they talk about the timeline of the crypto crash today, which actually was yesterday, last night. But Coinbase suspends Silvergate payments. SEC says crypto exchanges are not safe. Yeah, we know that. They've said that many times. Crypto.com suspends Silvergate payments. FTX confirms $8.9 billion in missing funds. And crypto loses $200 million in an hour. So a lot of stuff going on. There's 5 points. I'm going to tackle those 5 points. And I'm going to add on 5 of my own to make it up to 10. Because I like even numbers. Point number 1 is this. Coinbase Halt payments with Silvergate. Kind of covered this yesterday. We all know what went on there. Coinbase said it's no longer initiating payments to or from Silvergate. And Coinbase went on to say that they do hold their clients' funds at FDIC-insured U.S. banks and government money market funds. So don't worry about a bank run. So when a client has a large dollar balance, they stick it in a safe hole. So don't panic there. But again, we'll go a little bit further. First of all, it's not just Coinbase. There's a thing called the SEN network, which is from our Silvergate network. It's a banking network that basically enables rails to move fiat basically between traditional finance and crypto exchanges. And a lot of companies are losing their rails because they have stopped working with our friends at Silvergate. That includes Coinbase, Galaxy, Paxos, and a few more. In fact, Circle as well said they would be unwinding certain services with Silvergate. Cumberland, which is the crypto division of the Chicago-based giant, said it had minimal exposure to Silvergate over the last few months. And also, Kraken tweeted that it's actively monitoring concerns about Silvergate as well. So everybody's kind of bailing from Silvergate. Talk about a bank run. A quick reminder of who has reacted to swiftly and cut relationships. Coinbase Global, Galaxy, Paxos, Gemini Trust, Crypto.com, and CBOE, Chicago Board Exchange, Clear Digital LLC. So everybody's running for the hills, and they're finding other ways of getting their on-ramps. But that was a big piece of news. Let's move on to the second bullet. Point number 2 is this. The SEC says crypto exchanges are not safe. Gary Gensler may not be qualified custodians. That is, the exchanges may not be qualified custodians. And he was talking at an investor advisory committee on yesterday, and recently proposed a rule directing investment advisors to look to qualified custodians for storage of assets, including cryptocurrencies. And they need to make important enhancements to exist protection rules to substantiate them. And remember, we all know this, kind of not your keys, not your coins, but I think it appears he's trying to insert some TradFi players into this whole process. I am of the belief, I believe every individual is capable of making their own decisions, as we saw recently with Tesla Investor Day. Wall Street clearly don't understand Tesla. Retail investors are way smarter than Wall Street analysts that cover Tesla, which is good. But that's just another example of how the government is so far behind, and sometimes they make very silly mistakes. but they should have been there to protect people from point number 3. This, well, CRO had some problems with a couple of things. We don't need to go there, but there has been a huge delay, obviously, in the filing and for the Silvergate filing, and that has caused, again, this is kind of related to point number 1, but you see Crypto.com also has pulled all relationships as much as they can, and they have suspended withdrawals and deposits through this mechanism. Now, point number 4, which is also the most important thing, that the SEC should, instead of Gary Gensler having private meetings with SBF, they should have fixed this and prevented it from happening. This came out as well yesterday, believe it or not, from the Wall Street Journal. And Barron's and everybody else. FTX says $8.9 billion in customer funds are missing. That's a large shortfall out there. FTX says it has identified that huge deficit in customer funds that it can't account for. And this is the first time the bankrupt cryptocurrency exchange has pinned down exactly how much has gone missing. But the good news is it's such a substantial amount, it can't just all disappear. It has to be somewhere. Or did they just lose it all in trading? It is kind of completely stunning. But this goes back to Gary Gensler, his very profound statement, crypto exchanges are not safe. I mean, anyway, I will not get angry. Let's talk about the FTX Payables. Where are the coins? You can see here, these are the customer payables with the amount of Bitcoin in millions of dollars at the time of petition pricing. Remember, it's a moving target, but there is a truckload gone missing. So the big question is, were they selling tokens that didn't actually exist and pretending just to raise money? I'm not sure, but you know, it's taking so long, and I thought they had a much better handle on things, but apparently they still do not. And they have found castles in the Czech Republic and other places. They need to go further, deeper, and get at all the assets. Follow the money. There is always a money trail. Let's talk about point number 5. This is about the $200 million wiped out in the last 24 hours. More than 200 billion wiped off cryptocurrency market in a day. And what that looks like in terms of some liquidations, $210 million in longs were liquidated. They got hit hard. That is the biggest long liquidation so far in 2023. Again, the red candle was so sharp down, people had no chance to recover. But again, that's one of the reasons I don't play with leverage in crypto, because you don't know what's going to happen. It's like playing with commodities. You don't know what's going to happen. Could there be a war or some other macroeconomic event? But I do like leverage with equities. Point number 6. This is British banks. The British banks are blocking Bitcoin. UK banks are getting tougher on customers using crypto. In the past week, 2 of the country's biggest banks, Nationwide and HSBC, cracked down by applying daily limits for buyers or restricting credit card purchases or restricting them altogether. And of course, we know JP Morgan called Bitcoin a Ponzi again. And the ECB is openly attacking Bitcoin and crypto as well. But the British banks, like HSBC, have always had this hate relationship with crypto. Anyways, no big surprise there. But this was released yesterday. Point number 7, Mt. Gox. Everybody's very concerned now about the disbursements that are going to happen in very short order, happening real soon. Now, we know that in the history of Mt. Gox, for those who don't know, 850,000 Bitcoin went missing from the exchange in 2014. Can you imagine? It's 2023. It's 9 years ago. And they were able to recover about 142,000 Bitcoin, as well as 143,000 in Bitcoin Cash and about 69 billion in Japanese yen, I think it was. But this represents about 20% of the hack that they recovered. Now, the amount of Bitcoin that is there, however, does represent about 90% of the average active daily supply, which is big. So imagine a situation where people got all their Bitcoin back on the same day and dumped it on the market, it would tank the price. But this article believes that's a very unlikely event. The people that have been waiting for 9 years, they're not going to ditch their Bitcoin. They know where this is going. And especially if everybody runs for the doors at the same time, price will tank. But there will be maybe some liquidations, maybe 20%, maybe 10% of those people will liquidate, and it'll be gradually over time. It's not going to all be in the same day. So a lot of people are not too concerned about that piece of it. But again, it's also unusual. all of this is happening in March. We should call this March Madness. I nearly called this video March Madness, but I didn't want to get into trouble with some basketball authority. So point number 7, Shanghai. No, this is the Shanghai upgrade. There's the other thing that's happening in March. Shanghai is upgrading, which will release a lot of Ethereum that is locked down. And this hat tip to Rich Falk Wallace. He's the CEO of Arcana. He put this cool model together, and I love models. Just a little screenshot of it here. But basically what he talks about is only 14% of the chain is staked of the 122 million ETH outstanding. And when you look at this compared to other chains like Avalanche is 55%, Solana 70%, Cosmos 62%, Cardano 72%, it is a small amount. But he came up with a worst case scenario of the dumpage that could hit the market. And that would only be 6% of daily volume for the first 3 days, and then 1% for the next 6 months, and 0.3% for the next 18 months. So that is not too big. But it is important to remember the 5% and the 200% and the 200 millions and everything else at the beginning. This is important math for us all to know. And big thank you to Anil Vora. Basically, think about this. Crypto market value yesterday had 1 trillion market cap almost. A $200 million sale caused a 5% loss. We're not sure exactly. I'm trying to pinpoint exactly where the dumpage came from. But I did notice between the 1,000 Bitcoin holders and 10,000 Bitcoin holders, they did offload yesterday. So it could have been just one person getting nervous. It could have been a transfer of funds. I'm not sure exactly what happened. But the bottom line is price is made at the margin. It doesn't take a lot. I calculated way back last year that you could dump the Bitcoin market with, 8,000 Bitcoin or something like that, or even less. You can take the market down drastically because the price is at the margin. Unless the buyers are there to receive it and pay cash for it, you're stuck. And with all of the activity that I just covered in points 1 through 7, the on-ramps are being stifled and shut down. So it's very hard to find that liquidity for people to come in and buy up those Bitcoins as we go forward. Now, I did warn you, wear your seatbelts. It's going to be a bumpy ride. Point number 9. Again, let's talk about this. Do not trust anybody. This guy fooled everybody. He fooled me. He fooled government officials. He fooled Gary Gensler. Or maybe he's in bed with Gary Gensler or others. Look at him here sitting on the stage at the WEF with former British Prime Minister Tony Blair and Bill Clinton. So neither of those two guys have come out and said, we don't condone this behavior. Maybe it's one big orchestrated thing that people have been floating around. And as Elon Musk says, find me a conspiracy theory that is not true. So we'll see. Maybe this is all orchestrated. And I said at the beginning as well, short term, this could be all bad for crypto. Long term, if they're trying to ban it, it's a good thing. Let's go to point number 10 real quick. ECB. Here's our friend. She'll remain nameless. Or will she? Christine Lagarde. Here she is. But, they're focused. They're bent on attacking crypto and not the issues that they have at home domestically. And there are some investigative reports that have revealed the ECB has directed all European banks to limit all their cryptocurrency holdings to a hedge because of the many risk factors surrounding it. And as much as possible, try block on-ramps. It looks like the British banks are the ones listing the most because there is some good news, ladies and gentlemen. First of all, 2 of the biggest banks in the United States, Citibank and Bank of America, in a recent report, Citibank said that the crypto market has remained very resilient despite the weakness from the equity sector and increased regulatory action against firms. So net, they believe, that is, Citibank believe crypto is holding up really well, Bitcoin, etc. And Bank of America are very bullish on layer 1s, and they say crypto assets powered by smart contracts enabled blockchain tokens will be growth drivers, having the same risk exposure as growth stocks and disruption stocks. And it added that these crypto assets and small tokens could continue triggering a very good rally into the year. So that was extremely bullish news. In addition, there are countries trying to ban and block crypto, but there are also others that like it. Hong Kong and Singapore are very open to crypto. As we know, crypto is borderless, which means that US is important. But remember, we need to keep an eye on what's happening and what's unfolding globally. And with this in mind, even events in Asia are of long-term significance. And the story there is the key players, Hong Kong, Singapore, China, and we know how much money China has. The losses of China, of course, they've had this belligerent attitude towards cryptocurrencies, but they do want to open up Hong Kong as a global financial center, and they believe crypto, and we cover that, could be an underpinning of that as they go forward. In addition, UAE is gunning for crypto business. Big thank you to Dr. Amrani for sending me this as well. UAE Economic Free Zone to accept Bitcoin and Lightning payments for services including rent and registration. Bring it on. And it's so funny. The world is just like layer ones, layer twos. Crypto is fickle. People can move fast. They can move their businesses, headquarter them anywhere in the world at the drop of a switch. And that is what these countries are looking for. There will be those that embrace and those that fight. Those that fight will lose. Finally, or penultimately, German banks are open to Bitcoin. Straight in from Bitcoin Archive, a couple of days old, but you have Deka Bank to offer Bitcoin to 500 plus institutional clients, and they can hold up to 20% of Bitcoin. Their on-ramps are ready, which is good for Germany. And we see good activities in places like Sweden as well, and Switzerland. Let's talk about, finally, Congress is pushing back on the Biden administration here. This was a hearing from the Digital Assets Subcommittee, and they're holding a hearing on March 9th, I think in about 6 days. And the question is it coincidence or is it coordinated, the Biden administration's attack on digital asset ecosystem? Again, Congress is pushing back on the admin, and thank God for those politicians there that see the importance of innovation and crypto and the blockchain. Final slide, and I ask you, if you learned something today, hit the like. But this slide in itself is a very, very important slide. And the question is it all a coincidence? And this is from Emma Bull, a brainy quote. Coincidence is the word we use when we can't see the levers and the pulleys. In other words, there's no such thing as coincidence, ladies and gentlemen. So big thank you for joining everybody out there. Let me see. And thank you to the mods as well. And the 1,500 people watching live. Hit the like, get us to 500 so I can get out from the shadow ban for once and for all. Because I do talk about things that I feel should be spoken about. Sometimes you step on a landmine and you blow yourself up. But I believe in being honest and open and direct. Love me or hate me, it's the best way to be. And I'm not going to change. So with that, everybody, thank you so much for being here. I'll see you all tomorrow morning for the quickie. Bye all.